Are you tired of chasing short-term trades and want to build consistent profits over the long term? Then this video is for you. And by the end, you'll know 3 proven long-term trading strategies designed to work in 2025 and beyond, and helping you grow your Forex portfolio steadily. And the third strategy is, in my opinion, a game changer, and it's also trusted by institutional traders and perfect for anyone who is aiming for consistent profits. What to cover today? Well, trading strategy number 1, number 2, number 3, risk management for long-term success, and last but not least, backtesting and journaling. So the first trading strategy is swing trading, and swing trading involves holding trades for several days to weeks to capitalize on medium-term price swings. And it's great for long-term success. Why? Because it balances the best of both worlds, right? You have less screen time than day trading, but more frequent opportunities than position trading. So you don't look at the screen basically the entire day for opportunities and nice opportunities to take sell buy trades, but you also do not just wait for months to enter a trade or to hit your TP or your profit level. So it balances the best of both worlds. There's a step-by-step guide, and it consists of 3 things. The first thing is use daily and 4-hour charts to identify trends. Combine technical indicators like Fibonacci retracement and RSI for entry points, and set stop losses below support levels and aim for a 1-to-3 risk-reward ratio. Let me show you TradingView to better show you the trading strategy. Okay, over here we're looking at the Euro USD chart on the daily time frame, which is important because we are swing traders. And we see price goes to the upside, which is good. So we know that it's trending to the upside. We do not take any sell orders. We can use, for example, the Fibonacci retracement, which means that over here I click on the highest high, which is here, and I also use the lowest point. Let me adjust it a little bit. All right, about here. Then we wait for it to get into the golden zone, and if it comes out, when it comes out of the zone, then we take the buy trade if we see a nice engulfing bullish candle or a hammer, for example. So you can enter a trade here, or the engulfing, you wait for it, put your stop loss about here below the candle, and you aim for a 1-to-3. Over here it's a 1-to-3 risk reward ratio trade, and you wait a few days, even weeks, because this is the 17th of October, and you enter the trade on the 14th of November, so that's almost a month. But you made a nice 1-to-3 risk reward trade, so that's good. So that is a nice swing trading strategy. Just check out and look for trends, wait for a break and retest trades as well. Over here, another opportunity. We see price goes to the upside, it breaks the resistance level, which is here. It breaks the resistance level, it comes down, and then we see that price goes to the upside again, and let's say that over here we grab the 2 again. This is the swing low over here. This is the lowest point right here. This is the highest point. We see price comes down, and it respects the 0.236 level. We see an engulfing candle to the upside, and we take a buy position over here. We place our stop loss just below the latest low, which is over there. And this was a nice 1-to-2 risk reward ratio trade, and it even goes higher, right? So if you wanna, let's say, trail your stop loss, that's also a possibility, because eventually it reaches the 4, also the 5, almost the 1-to-5 risk reward ratio. But yeah, if you want to throw your stop loss, you can change it over here, and then you adjust it here, and you move it up higher until it reaches, for example, this low, and this new formed low, and then over here your stop loss was placed here. So then yeah, you get out of the trade with profit. But so yeah, that's another, yeah, that's the first trading strategy, swing trading. Then we move on to position trading, and that trading style focus on holding trades for weeks or months to capture major market moves. Why it's effective for long-term success? It's less stressful, reduces over trading, and aligns with fundamental analysis. Basically, what you do, let's say that you know there is a new CEO, for example, for McDonald's or Apple, whatever, and you know his vision for the upcoming 5 or 10 years. Then you can position yourself, and let's say you have high hope that the company will do great because of the vision. You take a buy position, and then you eventually get out of the trade after 3 to 4, 5 years, right? So that's more, yeah, that's basically an example that I showed you. That's position trading. If you want to do it by yourself, I have a short guide. Just analyze long-term trends using weekly and monthly charts. Then use fundamental analysis, so look for interest rates or economic reports. So I showed you earlier, or I mentioned the stocks trading strategy, the companies, but you can also use this trading strategy for Forex. So then you have to look for the interest rates changes, the economic reports. And I recommend to just check economic calendar. You can find it on investing.com or MyFixBook, and basically it shows for the entire day or week what the high impact announcements will be. So for example, we have NFP, which is a really big market mover. So if it's bullish and it is better than the anticipated number, right, then price moves to the upside for many pips. And yeah, you can position yourself for these kind of moves. And also interest rates, they are long term, right? And focus on major pairs with stable trends like USD JPY or GBP USD. Those pairs, those major pairs, they have stable trends. They go, let's say USD JPY. If it goes to the upside, if there's a policy change or whatever, then it moves to the upside for a long time. So it's really good to position yourself with that pair. We have carry trading strategy. And why it's a long-term winner? Because you earn not just from price movements, but also from interest payments on high-yielding currencies. So it's better known as swap. If you, let's say, take a buy trade on Euro USD, and when there's a rollover, so it's the end of, if you live in Europe, it's the end of the day, and a new trading day starts. You see that swap is being charged, or you earn swap. So it depends on the interest rate for the specific currencies, but it could be possible. The dollar, for example, has a higher interest rate than the JPY, and then if you take a buy trade for USD JPY, you will earn interest rates. You will earn swap commissions. So that means that if price also goes to the upside, you will make money from the price movement, but also from just holding the trade overnight. So basically identify pairs with high interest rate differentials, old JPY or New Zealand JPY, and use a long-term trend confirmation strategy to choose your entry, hold your position, and earn rollover interest daily. And my tip is that this strategy works best in a stable or trending market, so avoid it during high volatile periods. Okay, so now I'm looking at the Australian dollar versus the JPY pair. I'm looking at the daily time frame, and for a long time the Australian dollar had a higher interest rate than the Japanese yen. So many traders and institutional investors, they went long on the old JPY because yeah, for every day that they were in the trade, they received a swap commission. So they earned by just holding the pair, right? So that's why we see that price for a long time went really high. It kept going higher because the Japanese yen, they kept decreasing the interest rate, and it was even negative for some periods. And then over here we saw an announcement that the Japanese bank, they would change the interest rates, and we also see that it drops really hard. So it's also a quite dangerous trading strategy if you do not watch the news, right? So if you only just hold and think, well, it should go up for a long time, this trading strategy is not for you. You have to keep involved, because one announcement can have a huge impact. So risk management. Risk management for long-term success. Well, the best strategy won't save you if you're risking too much per trade. My tip is limit risk to 1 to 2% of your account per trade. Do not over leverage. And if you want to do this for a long time, just stick to the 1 to 2%, perhaps 3% of your account, but don't risk, let's say, 20%, 15%, 25, 30, 40, 50% of your account per trade. Because everyone loses once in a while, or some even more than others, but everyone loses, right? Maybe you have a losing streak of 3-4 days, then that would have blown your account. Well, if you limit it to 1% per trade, then you would have lost 3-4%, which is not a big deal. Also diversify across pairs to reduce exposure. So yeah, let's say you trade Euro USD, but you also trade New Zealand CHF. So if the Euro USD trade doesn't go well, it goes down while you have a buy trade. It doesn't matter because your New Zealand CHF trade is profitable. So in that way, you just diversify across multiple pairs. Regularly review and adjust stop losses to lock in profits. So let's say you are 50 pips in profit, for example, and it crosses of there was just a breakout of a new resistance level, and you're in a buy. Then you can adjust the stop loss to the latest low, the new latest low. And that way, if price goes to the downside, which we saw with the old JPY pair, you just took your profits and nothing happens, right? You won't just lose all your profits because you have your stop loss trailed in profits. So that's really important, especially if you are a carry trader. Just trail your stop loss into profits. So that means that you don't give all the profits you made back to the markets. The recap in one sentence: well, swing trading, position trading, and carry trading are 3 powerful approaches to building long-term Forex success. And I'm wondering, which strategy are you excited to try first? Let me know down below in the comments. And again, if you also need any help with trading, I offer a few services, and just check out if that is something for you, and maybe I can help you. Alright, thanks for watching. If you like this video, give it a thumbs up, subscribe, and I'll see you in the next video.